Hello, everyone. Welcome to the CoStar News Hotels podcast. I am news editor Sean McCracken here with Michelle Russo, founder and CEO of HotelAVE. You know what, Michelle? I actually always say it in my mind as HotelAVE. Is it supposed to be HotelAVE? I don't think I've ever actually asked that question.
It's supposed to be. It's because
I'm
AVE
that guy.
stands for asset value enhancement, but don't
Yes.
worry, even inside the firm, we still go AVE or AV or we have
I'm
French clients that call it AVE. So
I I knew the reason for it, but when I see it, I see it as like Hotel Avenue for some reason. So like, that's why I abbreviate it that way in my mind.
it's fine.
So Michelle is here to talk to us today about what is, I think, in many people's minds, the most interesting hotel transaction of 2025, which recently picked up the Transaction of the Year award at the America's Lodging Investment Summit, which was the deal out of receivership for the Parc 55 and the Hilton Union Square hotels in San Francisco. Um, Regular readers and news consumers will remember that those are the properties that back in 2023, Park Hotels and Resorts walked away from $725 million in debt, uh, basically washed their hands of it, and then the hotel was put into receivership through the court process. Michelle, you were the receiver. It was your job to kind of pick up this process after Park walked away. So let's start at the beginning. Kind of what was your first impressions there, and how do you feel that process kind of played out? Like, what was your general impressions of that?
Kind of the takeover process, if you will.
Mm-hmm.
Um, well, they were, beasts of assets, right? 2,000 plus room properties with a lot of moving parts. I have to say that Parks was really cooperative in assisting us in the transition
Mm-hmm.
because there was a lot happening.
Yeah, I
Um,
can't imagine. I mean, maybe I'm wrong. And obviously receivership is a big expertise of you and your firms. I can't
right.
imagine you would have a much more kind of cooperative defaultee because they were just pretty open about where they were at with those properties and in that process, right?
Right. No, they were great. And I think it also made it a little bit easier that Hilton stayed in a lot of
Mm-hmm.
receiverships. The borrower is the operator. And so
Mm-hmm.
you lose a ton of continuity.
Yeah.
But no, Parks was incredible. There was a lot to transition from them that they executed versus Hilton. So they were really helpful in addressing that. Um, but in October 23, when we took over, I mean, it was probably the record low year for San Francisco. I mean, there was more loss of group business, right? Tourism negative perceptions, right? There's some relatively new efforts by some groups to try and change or influence government. We joked that we spent more time focusing on politics, to create positive change than revenue management strategies.
Yeah. Which I'm guessing is
Um,
not a normal part of your job, right?
not no, not to the extent that we really had to get involved in that way. Um, but there's a process as a receiver of securing the asset, protecting it, maximizing proceeds for all constituents. The hotels were losing a lot of money, so right, how do you mitigate those losses? Right, there were capital projects in process or identified that we had to take over. Um, Procuring insurance. There's just a lot to do in the ordinary course of just almost administratively while getting our arms around the assets to develop the business plan to maximize value for the trust.
Yeah. And that, I guess that kind of transitions to the next thing I want to ask you, because obviously beyond the receivership part of the business, your hotel asset manager. It's kind of your part and parcel for what you do to go into an asset, find out what's wrong with it, basically, be kind of that, I don't want to say annoy the operators, but press them into kind of better profitability, better sustainability for the asset and maximize value. Like, was there anything getting in under the hood that you immediately came in, or was it just these were relatively well-run assets at the wrong place at the wrong time?
I would say more the latter. I mean, there's always opportunities and right, and leveraging data to support those identified opportunities, and Hilton was super cooperative in in dogging those down, as well as very receptive to uh, creative revenue management strategies when you're trying to induce demand, right? Because there's a total lack of demand into a market. Um, but again, the mandate, right, was to focus on stabilizing the asset, right, protecting it, and then selling it. And we had to get the court's approval for several extensions on that sale process, just because it was very complicated about how the sale would proceed. I mean,
Mhm,
another really unique component to this deal was that there was an assumable loan that a buyer could assume, uh,
mhm,
which is not typical in other receiverships, right? Again, the that is not the case. I've never experienced that before. Um, so that also really working with Eastdil, who was our broker, right, trying to figure out the optimal way to position the asset and the fact that that loan was assumable, um, to achieve the mandate was, just took a little bit more time than
mhm.
we all thought initially.
Yeah, for sure. So, I mean, obviously, you mentioned the loan as a part of this. I did wanna ask, I mean, obviously, we won't get into the nitty-gritty, the details on pricing, but I think a lot of that has been reported out publicly, specific figures that may or may not have caveats to it. I think the thing that people probably jumps out in people's minds a lot is, these assets traded in about a decade ago at a price that was significantly higher than the numbers we saw reported in 2025.
Yeah.
So as somebody who's, hyper focused on valuation of assets, like that's literally what you guys work on. Like, what do you attribute that to? Is that literally just perceptions or not and reality of San Francisco, or is it specifics about these properties, the situations, or is it a little bit of all of the above?
It's definitely market, but how the market affected top line
Hmm.
revenue, right, which then translates into EBITDA, and then also the market's impact on cap rates. So, if you think back to 2015, it was San Francisco was perceived as one of the top, institutional, hotel investor markets in the
For
country.
sure. And I remember when Park spun off from Hilton, their presence in San Francisco was, I think, one of their main selling points that they love to bring up.
Definitely. And so at that point in time, cap rates were much more compressed for San Francisco, right? Because the fundamentals were perceived as very consistent and there's barriers to entry and it was a highly desirable market. So right, fast forward to 2023, right, and 2025 when the sale actually finally happened, right. We're still not back to the 2019 RevPAR levels, for San Francisco on an absolute basis. I think we're at 75 or 80%.
Yeah.
But in the
And that's not
meantime
even adjusting for inflation, all of that. Yeah.
exactly, and so costs have gone up over 30% since 2019, and so that obviously has a big impact on your EBITDA. So there's less EBITDA to capitalize, and we actually sold the property with negative EBITDA. So
which is
It
less than
really
ideal, I'd imagine, for an asset manager to wanna do, right?
it was, but the asset also was 10 years older than it was in 2015, and it needed a renovation, and that was part of the buyer's business plan, and between the positive momentum that kind of started in '24 through 2025 for San Francisco and, um, you know, and also the business plan with the capital investment, it just gave the buyer more confidence that
Yeah.
they can, uh, easily turn it around, which we totally agree with that business plan.
So in general, what was it like finding I mean, obviously, you mentioned, how great it was to work with Eastdil as the brokers on this, but you literally just mentioned the 2 years that you were receiver on these properties, there was a pretty noticeable perception shift on San Francisco from get out of the market to this might be the time to buy the dip. I mean, did that impact, the pool of buyers that you were looking at? Did that impact kind of the process of, finding potential buyers from your perspective?
Oh, definitely. And also, part of the rationale for the delay that the court approved for us was
Mhm.
this, needing, these green shoots, if you will.
Yeah.
So, right, the political aspect, the change of the board of supervisors that manage the city, right? Um, the mayor, right, who's super focused on, right, addressing the homelessness and other considerations that were negatively affecting perceptions of tourism. All those things started to create momentum where you started to see, 2025 in particular, a lot of growth in citywide group. Right then, fast forward to 2026, you have the Super Bowl, you have, right, they'll benefit from some FIFA as well. So, like, there was just positive momentum that
Yeah.
was obviously helpful in, not just to the buyer, but to the buyer telling their story to their investors as well.
Mhm. Oh, for sure. And I'd imagine all of that adds up to, you feeling pretty differently about the trajectory of these hotels, when you walked away than when you walked in, correct?
Definitely.
So, so I think you kinda already touched on this, but, I am curious, obviously, there's 2 really large, really kinda unique assets, operating hotels. Like, what made this different from your perspective than, any other situation where you might be a court-appointed receiver? Like, I can't imagine that this was just, business as usual for you.
So, I mean, a lot of times when we walk into a receivership role, there's what I'll call, right, a toxic balance sheet. And right, again, with Hilton being a, you know, a an institutional brand manager, right, we didn't have those challenges per se. And a lot of times we'll walk into a hotel where a lot of the rooms are out of order. Um, right, and it's just a small amount of CapEx that it needs to take to get them back up and running. Again, I think because of Parks as the owner, Hilton as the manager, right, that the capital of projects that were in progress or that were identified that we progressed were, right, they were already known. So those aspects were different, and again, in the sales process, like, as mentioned, having the loan assumption, um, as part of that sales process was quite unique. It also made it a lot more complicated too
Yeah,
because there
yeah.
wasn't just a negotiation of the purchase and sale agreement with me as the receiver, but also the negotiation of a loan modification, right, with the
Mhm.
special servicer, and
Yeah.
all of us kind of working in tandem to make sure that we were optimizing the goals and the value to the trust.
So, as I mentioned up top, just a few weeks ago, this was announced as the transaction of the year at, Alice. I'm wondering, somebody you've obviously worked in the industry for a good bit of time, you know a lot of the players, you've dealt with a lot of different situations. Like what does that sort of recognition like mean to you? Like, I mean, I'm I'm sure you're glad to have a successful resolution to the whole process either way, but to win an award for it is not nothing, right?
No, it is definitely not nothing, and, there were a lot of parties involved in this transaction, and, it everyone, really, was proud of that award.
Mhm.
The lawyers, the brokers, I mean, there was just a lot of different groups involved and happy to have the recognition that the goals were achieved,
Yeah.
you know,
I will
and
say as
really yeah, an acknowledgement to everyone's efforts, for sure.
I will say, as somebody who was in the room when the awards were handed out, I remember when they were going through the nominees, and the second they said, like, brought up like Park 55, Hilton Union Square, like, oh, okay, that's going to win. Obviously, that's obviously going to win. So, I mean, it feels like it wasn't just like it was the deal that kind of defined the year in a lot of ways. Like it was the hotel deal that everybody was sitting on the edge of their seat waiting to see, what's going to happen here, because it's kind of a bellwether moment for the industry in a lot of ways, and especially for the market.
Definitely, I I don't think anyone had given back hotels that substantial before. I
No.
mean, that
Yeah.
let's start there. Think about the thought process that had to go into making that decision initially, right? And then, yes, San Francisco as the laggard market, right, from a recovery standpoint, and not just for the benefit of the trust, but I definitely view this sales as a real turning point for San Francisco.
Yeah.
Like not just the capital reinvestment that will go into the properties that will again create more momentum for group pace for the city, for the hotels, but I think it just there have been a lot of people that were starting to sniff around San Francisco. I felt
Yeah.
like it had bottomed out, and, this I think this transaction is going to help, with additional investment. And typically when hotels trade, then they get capital reinvestment, and again, that's all good for San Francisco, and it's a longer term recovery. It's definitely it it's a longer term hold outlook, San Francisco is still, but I wouldn't bet against it.
The interesting thing I think is exactly what you were saying. I feel like there was this moment where everybody started, in these like hushed murmurs of like, you know what, you might start looking at San Francisco again. There might be something interesting there. And then this deal was like, kind of the dam breaking there a little bit. It's like, okay, somebody's putting their money where their mouth is, right? Like one way or
Exactly.
the other. We'll see. I mean, obviously, with any investment, you ultimately see how it turns out. But all of the basis there that made everybody love San Francisco before the pandemic is still technically there in one way or the other, right?
Yes. Yeah, and it's, the politics, um, are definitely much more tourism
Hmm.
friendly,
Yeah,
and aware of what needs to happen and making changes, and that so critical. Um, I mean, and, again, I think that was another unique thing of this deal is never having to think so much about and try and figure out how to deal with things that you maybe take for granted, from a political, environmental standpoint.
so I guess the last thing I want to, not to put too fine of a button on all of this, but I know obviously at a certain point, years from now, maybe you'll probably still be talking about this deal in one way or the other because I feel like it is one of those big deals. So when you're explaining this to somebody, when guys have some, young intern and you're trying to contextualize all of this and you're thinking about, well, what makes this interesting? Like, what are you really going to remember? Like, what is the detail of all this that really sticks out in your head?
Hmm. Probably I mean, there were so many fits and starts to this.
Mhm.
So probably just the persistence of everyone for that matter,
Mhm.
working through it. Like it was like we are not. This is not going to happen.
Yeah.
Um,
Yeah.
and like that kind of that saying failure is not an option.
Mhm.
It just wasn't.
Mhm.
So I when I think about that deal, I think that's what I think about it is it's like the 100-mile, race, or
Mhm.
you just
Yeah.
can't
It
just
was
can't.
the Iron Man receivership.
Yeah, truly.
All right. Well, on that note, thanks a lot, Michelle. I really appreciate you taking the time.
Always good to see you.
Hello, I'm Luke Haynes, People Newsletter Editor CoStar News, and the host of Top Credentials, a monthly podcast exploring the colourful careers of those working at the top of UK commercial real estate. In the episodes, we discover the valuable lessons influencing the daily decision making of property sector leaders, and hear about the aspects of their job that make it a little easier to get out of bed each morning. We'll also ask for their views on the latest news and policies shaping our constantly evolving industry, and even get them to share a famous quote or song title they think defines their career or the profession. Listen on Apple Podcasts, Spotify, or wherever you get your podcasts.
This episode of the CoStar News Hotels podcast was recorded on February 10th, 2026, and edited by me, Sean McCracken. Head to costar.com/hotel news for more of our coverage and find all of our podcasts on Apple, Spotify, YouTube, or your platform of choice.